This post was originally going to be just a simple picture, but for reasons that will be clear by the end of this video, it really is more appropriate to do as a video. And I got this idea from the boys in Gainesville, our friends at Elliott Wave. I was thumbing through some of their recent materials, and they pointed out a ratio chart that I found kind of interesting and hadn't really thought about. So there's two components to it. The first one is the semiconductor index, the SOX. And this goes back to 97, which I don't know if that's when the index began, but probably. And of course, this has been a crucial table leg, if I can use a poor metaphor, in the table of this crazy bull market. And it's funny, only until now, I'm recording this Friday evening, only now did I glance at the SOX itself, and wow, this is pretty interesting because we do have a pretty key failure right here. That's not why I'm doing this video, but it's just, it's kind of swapped me over the head at this point because in retrospect being a day ago, this is the most incredibly obvious trade in human history because you've got this channel, it broke here, and it just kind of farted around. It climbed up beautifully. I'm really glad I'm doing this video after all. There's a lot more to this than I thought. But it held resistance absolutely perfectly. Right here, just incredible. And it fell some more here. And then on Thursday, we had a lot of strength, and it just about got there. So it opened here and powered higher. So it's very strong on Thursday, and if you can get a time machine out, this is the perfect place to go crazy with short position because this lower line of the trend line clearly proved itself to be in the role of resistance as opposed to support. That changed all on this day. And then on Friday, it fell even a little lower than it was here. So, you know, people joke about, you know, price is not seen in 2 weeks, and that's kind of what we're dealing with here. I mean, this only goes back to March 20, but this is a pretty core failure. So just kind of like honor it with a new little line like so, because I think it's worth mentioning. I'm going to get back to the ratio chart in just a sec. All right, so that's that, like that. Okay, the other element is the Dow Jones Industrial Average, and this goes back way farther. The Indu goes back literally to like when all men had handlebar mustaches at the beginning of the 1900s. And back when markets were like, you know, organic and normal and actually moved up and down. Can you believe it? So anyway, when you do a ratio chart, it only shows the data as far back as the shortest data set, because obviously there's no point in a ratio chart if you've got the Indu but not the SOX. You know, the semiconductor index wasn't that important in the year 1917. So it only goes back to the beginning of the SOX. So having said all of that, it looks like, drum roll please, this. Now, you can't see it, but I've drawn a horizontal on the highest point back at the peak of the internet boom. Now we're going to use our super stretchy feature here to drag it down like so, and now you can see it quite clearly. And this, my friends, is why I'm doing this video, because this takes a little explanation. Believe it or not, that horizontal line actually touches the peak back here. And you're saying, well, Tim, how can that be? There's space here. And indeed there is. Because there's so much data here, you know, thousands and thousands and thousands, maybe even tens of thousands of data points, there's some compromise in how it's rendered. Now, if you zoom in nice and tight, like so, you actually do see that on March 10, which is a very important day in the internet bubble, that was the peak, March 10, 2000, it hit 0.1342. In other words, the semiconductor index was 13.42% of the Dow Jones Industrial Average figure. So that was the tippity top. You go like this and it looks like there's a gap, but there's not. So just emphasizing, this line equals the tippity top. And then it fell like crazy from 1342 down to like 0.022. So a tiny fraction of its peak, and that was down in the depths of the financial crisis. And it began this explosive move higher. And then we move in here, and holy hell almighty, look at that. Back on March 7, which weirdly, interestingly, is just about the exact same time of year. So that's, I can't believe I had to pause to do the math on that. It's like, what's 24 minus 0? 24 years later, almost to the day, God, my brain is so broken. We did another peak, and I am going to stand on a tree stump now and say that will be the peak, because it just makes all the sense in the world that it would double top like that. So this is a really incredible and amazing chart. I think you see now why it was so important to make a video so I could explain all this weirdness to you, like the construction of the ratio chart. Why isn't the line really touching where it's supposed to be touching? And also even something as simple as, without stretching the chart, why is it invisible? Because just an unstretched chart, the line isn't showing up because the peak of the chart, as this is rendered, is sufficient. And you have to kind of zoom in on that area to reveal that. So that's why you got to play around with this monkey business like so to actually show the damn thing. Well, I think I've said all I can say about this. So anyway, Arneo, you may well find your glorious day is at hand, because this is, to my mind, a generational top in this ratio.